Hi, welcome to the Dutch Value Investor channel, the channel where I help you find the best value stocks to put on your watch list. In today's stock analysis video, I'll be giving you my analysis of the Moat, the management and the intrinsic value of TREX. So without further ado, let's have a look at the Moat. The moat, or durable competitive advantage, is what is protecting the company from its competitors. I believe a company with a wide moat will have a minimal average growth of 10% compounded per year for at least the last 5 to 10 years for the following metrics. The first being equity growth. Second, earnings per share growth. Third, operational cash flow growth. And fourth, revenue growth. So looking at the growth rates of TREX. Equity growth comes in at 22.86%. Earnings per share growth is 59.26%. Cash from operating activities growth is 22.52%, and finally revenue growth comes in at 16.2% compounded over the last 10 years, giving TREX an average moat growth of 30.21% compounded over the last 10 years. Nicely above the preferred 10%. It looks like TREX has a wide moat based on these numbers. So I believe a healthy growth rate can be maintained for the medium to long-term future. Next, let's have a look at TREX's management. To me, it is essential that a company has capable, efficient, and shareholder-friendly management. In order to evaluate the quality and efficiency of the management, I will be looking at the following metrics. Number 1. Return on invested capital, meaning what is the rate of return on the money being invested into the company itself. Looking at the return on invested capital, TREX's management was able to maintain an average return on invested capital of 36.15% for the last 10 years, nicely above my preferred 10%, and this indicates to me that management allocates its money effectively. Number 2. Long-term debt versus free cash flow. I like a company to be able to pay off its long-term debt with its free cash flow within a maximum of 3 years. Since TREX has no long-term debt, I am confident the company won't get in any trouble soon because of financial problems. And finally, number 3, share dilution. I do not like it when management is reducing my share of the company at a higher rate than 1% compounded per year. I'd rather have them buying back shares and increasing my piece of the pie. For TREX, looking at the last 5 years, management has been buying back its own shares at a 0.58% compounding rate. So looking at these numbers, I believe management is capable and efficient and seems to have the shareholders' interest at heart. Before we go to the valuation, I need your help growing this channel. So hit the like and subscribe button and remember to click on the notification bell to get a new value stock idea or target price update as soon as possible. Now, let's get to the valuation. I will use my projections and analyst projections for the next 5 years to come up with what I believe is today's intrinsic value of TREX. In order to calculate today's intrinsic value based on earnings, I will have to use the following 4 numbers. Trailing 12 months earnings per share, future growth rate, future price per earnings and required rate of return. Trailing 12 months earnings per share after release of TREX's latest quarterly report is $2.26 per share. For TREX, I assume the projected compounded annual growth rate to be 14%. This is lower than the average of the Moat growth and analyst growth rate. Because the two rates were not in line, I reduced the annual growth rate to what I believe is a sustainable growth rate for the next 5 years. For future price per earnings, I multiply the growth rate by 2. I always verify if this PE is reasonable and historically accurate. Meaning, has the stock been trading at this PE level for a considerable amount of time in the past? Finally, the required rate of return. For an investment in an individual company, I recommend aiming for a 15% return on your money. Otherwise, I think it is not worth the risk of investing in individual companies. Using the following formula. I believe today's intrinsic or fair value of TREX is around $61 per share. Now to be clear, I do not advise buying TREX at $61 per share. A lot can happen in the coming years and my assumptions can be wrong or too optimistic. So always apply a 30 to 50% margin of safety. So in this case, because of the growth rate of 14%, I advise to apply a margin of safety of 30%. giving TREX a target price of $43 and downwards. Now to verify if this price is really attractive, I will be using a second calculation method. For this calculation, I take the trailing 12 months free cash flow and grow it with the same growth rate as the earnings for the next 8 years. I use 8 years because I like to get my money back in 8 years or less. I add up the free cash flow and add the equity. I divide this number by the number of outstanding shares and end up with a share price of $52. So based on the numbers, it looks like TREX is a great buy below $43 to $52. So I will put it on my watch list and wait for the market to put TREX on sale. Should the target price change by more than 10% after a quarterly or yearly financial report, I will give you an update with the new target price. Give me a thumbs up if you like my analysis and let me know in the comments which companies you have on your watch list. Thanks for watching and see you in the next video.